Adam, it's always a good time talking to you, partner. What a great time. Well, it's always a great time to talk to you. So, welcome back, buddy.
I'm
There
in
we
there
go.
now. Hey, Dale.
Hey, hi. How are you, Adam?
Get the video going here too. I'm doing good. I'm doing good. I'm
Okay.
just back from South Africa.
Yeah, there are a lot
Wait,
of
wait, wait,
guys.
wait a second. I'm
Yeah,
sorry. I just first of all, I'm
yeah.
just I'm about ready to hit my mute button. Adam, welcome to the show. You're in
Yeah.
South Africa. Tell us that the rand is not going to break down.
Wow, man, it's dire there. The electricity
Yeah.
problems. I mean,
Yeah, I was
it's
going
a.
to say it's got to be
It's,
crazy. Or tell us about it. I'll mute
um,
myself.
Yeah,
I
because the
mean, they
guys
have.
here came in and Blake have been on the rand. They've been
Is
trading
that
it.
right?
So,
Well, you have. I'm an optimistic guy, right? You have a young workforce, a lot of resources, 30-some% unemployment. You should have some money coming into the country, but if you don't have stable electricity, you just can't get inbound investment. Now you would think growth would be like zero without electricity, but somehow this year it's scraping along at flat growth, not declining to nothing. But all the investment right now in South Africa is going into generators and security, because crime is so high and electricity is so scarce. So it's tough to get bullish, and I want to get bullish on the whole region, but it'd be other parts of Africa that I'd invest in that
did you
are
feel
a little bit
secure
less.
when you were down there with you?
No.
Did your whole family go?
I mean, we're in the night. No, just me. It was a 3-day trip, so it was a long way there and back.
Yeah.
But even this is the nicest part of Johannesburg, probably the nicest part of sub-Saharan Africa. But problem is, you go out at night. There's no street lights, right? So it's just scary in any
Wow.
city. No street
Spooky.
lights.
Yeah.
And then, you go out to order an Uber and they're like, don't hold your phone. If you get your phone, don't hold it in front of you. You wait for an Uber to see when it's coming, or you're checking your phone. They're like, hold it against your chest. Because you hold it out, someone will just steal it from you. And I got there. I was like, I'm going to go for a walk. I've been on a plane for like 20 hours. They're like, no, don't go for a walk. So, you just see it every the kids begging and then you go like indoors, right? And there's the guy with the full-on rifle there, and you're in a mall, and it's the nicest mall you've ever seen. Like, it's the Dior, the Versace, everything, So there is money there, but you know how it works with corruption. I think at some point when the dollar cracks and the resource markets get going, money has to fight its way into Africa, because it's possible to get the resources out. But and also Rwanda, someone mentioning in the comments, I heard a lot of good things about Zambia, and there if you have less corruption and decent infrastructure, there's a bright future in a lot of places in Africa.
Yeah, the Chinese think so, don't they?
Well, that's, there's a reason. And I kept asking, well, why, the question everyone asks is, okay, why is China investing so much in Africa? Well, but the question I'd ask is, why aren't Europe and the United States investing there? And, they kind of feel like they're missing the boat while China's playing the long game.
That's why we don't play the long game.
Yeah, I'm starting to call it now. Capitalism is supposed to fix a lot of these problems. And not like, I don't expect anyone to invest in anywhere without electricity, but we're kind of in this area of, like, I call it chicken shit capitalism right now, where, this investors want this like guaranteed 10% return in a safe place, or more. And it's, a lot of it's getting sucked up by technology, and that's fine because the returns have been spectacular. But the way capitalism is supposed to help in Africa and the world is, money flows to places with a pool of labor, with abundant resources, and people take that risk. You're not supposed to make money without taking risk.
Is this really you, or are you AI generated today?
I'm here. I'd like to.
Anyway, what I really want to also get to, Adam, is the big debate on the turn in the dollar last week. If it's just a little hiccup, or it's going to have legs and even surpass the highs that we put in March over 105. What camp do you fall in?
It's I mentioned that just in the rand, and we need this crack in the dollar, right? And that's the next big trade. It's the next big trade in everything. If gold's going to break out, if resources are going to go, if stocks will bottom, you need the dollar to really crack. the Fed has stopped hiking, right? So that opens the door to that whole trade. But then, retail sales yesterday pretty strong. I just think it's premature to call it. And the dollar is still the big dog until proven otherwise. And I think, that's one I'd rather be late on than early. I talk a lot about trades.
Okay, so you want some confirmation. What kind of levels would give you that?
Yeah, I wouldn't know if it's the levels for me. Somebody in the Fed talking about cutting. Somebody. You can't wait for Powell to tell you they're going to cut or cutting. It's late then, but somebody actually talking. And this week it was interesting. They're saying, hey, listen, the market sees cuts, which means the market sees falling inflation, but we don't see that. But the kind of implicit in that is, hey, if that falling inflation does happen, maybe we will cut. I think that was Bostage.
Okay.
And, that was sort of something along those lines. And that's the kind of thing I'm looking for. And it'll come with economic weakness, which creates all this turmoil at the same time, right? So I think this huge turn in the dollar has to come with volatility. You have to see, at big turns, you see big volatility, and we're not there right now. So when we get some weeks when we have, 6 or 7 handle moves in euro dollar back and forth, then I'd perk up a little bit more. But I'm inclined to think it's more in the second half of the year, or even into the third quarter, or the fourth quarter.
A recovery in the dollar, not till later in the year, because you think risk off will happen later in the year, and that'll be
I think the dollar. I think the risk on comes back later in the year.
Okay. So
I think we'll see maybe a recovery in the dollar here now. I mean, that chart right there, that looks like a top, right?
Yeah, and down here is this 101 level where the blue speed line is also right around 61.8 of the whole wave from the lows last fall.
I mean, don't underestimate the U.S. consumer. The U.S., well, that's it. Europe looks like it's kind of cracking right now, right? High interest rates. You guys were talking about housing. They don't hit Americans in the same way because of the 30-year fixed mortgage.
Right.
And so we're seeing the U.S. consumer hold up. Well, we lost job losses in the UK this week. The ZEW, German business sentiment survey, soft. I think we're not done with energy problems in Europe. We'll see next winter.
They might be complacent about going into this winter because of how last winter went. They'll have recency bias, and maybe what everyone was afraid of happening this year that did not.
Yeah, it's weather trade, right? You don't want to bet on the weather, but it's 50-50 whether it's warmer or colder.
I did want to ask you about this. I was thinking about you as I was watching Dr. Copper take a slide. Okay, and that I said, I bet Adam is salivating at this because I know your long view on this market, that you would probably view this pullback as a great buying opportunity in some of the copper miners, et cetera.
I have a ton of confidence
a mind reader?
Where copper is going to be in 2026, and it's going to be much higher, right? And so the question is, or even 2025, do you want to be early or do you want to be late? And it kind of is a measure of your conviction, right? So if I'm early here and it goes back down to 3 or even sub 3, then I'll buy more. But, there's an argument for, okay, well, let's wait. And I think a lot of people are waiting. You talk to people and they say, listen, I want this recession to hit, and then I'm going to buy copper. I'm going to back up the boat. So, that's a fair argument as well for waiting. So I wouldn't say I'm salivating here because I'm as concerned about as everyone else. I don't think there'll be a harsh recession because you have 500 basis points of easing that you can introduce. That is a huge put in the market, including the copper market. But, China, the data this week was poor. And, half of the world's copper goes to China. So, it's tough I'm not backing up the truck here,
All right.
I like it.
It's okay. It's okay to change your mind near term. I mean, I'm very bullish on gold and silver long term, but I believe I'm going to have better entries.
Well, it just can't get above 2070, right?
Yeah.
It just can't do it.
So that covers the copper market. I also know you're kind of an oil aficionado. I can't make heads or tail out of
Well,
what's
it's
happening in
interesting. You mentioned gold
WTI.
and oil. So I think the blowout in oil, there was a fund in Asia that blew up last
Okay.
when it cracked down through. I'm not even sure it's showing it there.
Yeah.
That brief, and that's when gold popped too. So I tend to think they may have also been short gold, long oil, and the whole thing really blew up on them there.
Okay.
And then you kind of came off of that. Now, yeah, that popped down to 63. I mean, there's a little bit of support there. SPR refill. I mean, I like these levels. I think 70 now is kind of like 50 5 or 6 years ago because of inflation and costs and availability of oil. So I think the risk reward is pretty good. Again, you see net shorts like in the CFTC data, very bearish setup. I think it's in like the 6th or 7th percentile in the last 10 years on positioning in oil. So it's negative. Seasonals are bullish on oil through June. So lots to like, I think, in the oil setup right now. I do think a lot of the recessionary stuff is overdone, but we're now kind of into the jaws of the slowdown in a lot of the world. So yeah, I don't think it's going to run away unless there's something geopolitical.
Pretty ugly Bitcoin chart. What a difference a month makes.
Yeah, it's hard to find the enthusiasm. I was at this conference in South Africa and it was trading, and I've been to a fair bit of these kind of things. And, there was a time 3 years ago when or whatever it was, all anyone wanted to talk about was Bitcoin and crypto. And there was not a lot of it now.
Yeah.
So that, I think it was a bit of a tell for me that I don't think one person asked me about crypto, to be honest with you. Now it's maybe a different market down there. But it is, there was a lot more talk about gold, but at South Africa, I was in Johannesburg. The city was founded on gold. So maybe that's not surprising, but that, that it has had that nice move. And I just think it's a lot of people saying, listen, I wish I would have bought at 20,000 or 19,000. I'm not waiting in here at 26.5. So
yeah, I think they'll have their chance. They might have their chance to buy it there again.
That's a lot of things. If we think about this year, stocks too, and it's such a good indicator about where things are going. If everybody's waiting to buy the dip, it never comes. We started out the year talking about recession, right? It was going to be recession. January, are we in recession already? Then February rolls around and it's inflation. Geez, Fed's going to have to go to 6. Then March rolls around and bank failures. I mean, some of the biggest bank failures ever. And you add it all up, the S&P 500's up like 7%, NASDAQ's up almost 20%. And, it climbs the wall of worry. And that it really has been the case this year without a lot of help other than just a steady economy.
Yeah, a lot of sideways grinding. I drew this. I think it might be a diamond top. I'm not an expert on those formations, but I thought that we might be taking out the, I'll have to adjust my trend line, the triangle here. Let's get to the debt ceiling. I have kind of, like usual, different view of what's going to happen here. Do you think that, Biden cut his trip short? McCarthy's saying we could have a deal by the end of the week. You think it's going to get done before June 1st?
I don't know if that's the real deadline. I mean, these guys are such good liars, and they say, oh yeah, it has, but maybe it could be August. I heard some people saying maybe there's some juggling they can do if they can get past certain days. And the debt ceiling has come up 78 times since 1960, and 78 times the U.S. hasn't defaulted. And that is the trend, my friend. And that is the trend.
Well, 2011 happened during that trend.
Well, there was a bit of a shutdown there and but the U.S. didn't default on any payments.
We were downgraded.
They were downgraded. And
there was.
And they sent, how much did they end up finding Fitch, or they ended up,
then they went after him. Yeah, then they went after him.
They almost put him out of business.
Yeah.
So nobody's downgrading the U.S. I mean, that's the reality of the world, is that was crazy. I mean, we talk about corruption in Africa. That's all that was third world levels of retribution. and nobody's going to downgrade the U.S. again, even if they do default. It's nuts. So
I don't think either of them want a deal. I think I think they both want a default or run well past the X date. So that they think they think they can blame the other. They think they could blame the other party.
Well, Jamie Dimon will call them both up and say enough is enough, and or Tim Cook or whoever else would say, all right, it's time to stop playing games, and they will.
I mean,
you saw that. Comes from.
You saw that manufacturing data yesterday, right? Wasn't that the day before? It was one of the worst in history.
Yeah, that it's been volatile. It dropped through the floor, but then industrial production yesterday was strong. So yeah, I mean, manufacturing's weak right now. It really is. But restaurants are strong, so it seems to be kind of balancing out.
Yeah.
I think I'm a buyer of fear. I'm a buyer of panic, and I'm kind of set up just to wait. Let's see this get worse, and if something pukes, I'll be there.
Yeah, there really hasn't been any panic anywhere, to the upside or to the downside. Kind of a quiet period. But I think this dollar rally could have legs, and it'll be the least embraced dollar rally.
Well, that's what I said. Like, that's what I mean. I think the dollar has room to run kind of in this quarter, next quarter, and then you get a big turn in Q4. And you're right. But listen, the setup all year has been the U.S. consumer is going to be stronger. It just has more capacity, more pent up savings, 30-year mortgage, and you'll see consumers elsewhere crack on mortgages because they feel it directly. And if that comes with risk aversion, I'm not entirely sure. Japan, obviously we got worked up about a new governor, and it looks like the same playbook for now. So that looks like it's ready to break. Euro dollar looks like it's double topped. There's a bit of optimism about sterling, but the data lately has been soft there. And, Aussie, again, you're worried about China data. So there's not a lot of places I'd lean against the dollar strength. That's for sure.
Okay. Best idea for the summer, Adam.
Idea for the summer.
And is it nothing? Is it just be tactical and scalp? You don't have to have like a home run ball or a double or extra base hit.
It's tough to see a lot of conviction right now. It's tough to really get it. You have the Fed kind of up in the air. You have the dollar. Listen, that could be the dollar. Gold looks like it's top, but I'm not going to sell gold. So you're kind of on the sidelines there because, the central banks are buying.
I like this level, 1840-ish.
Yeah.
This is going to be what the people are going to buy into this 1920-ish. But I think that we will see prints under 1900 in the gold.
Someone asking about buying euro. I'd be a seller of the euro, if anything.
Seller of the euro. I think that this may have been the whole wave, Adam.
It's interesting. You guys were talking about real estate. I think real estate is. I'm a buyer of real estate. I think it is proving to be pretty resilient. It hasn't cracked yet. Yeah. People need houses. There aren't enough.
You can't live in your trading platform.
It's a supply trade, not a rates trade. And I know people buying houses in the U.S. right now. They're saying, "Listen, I know I'm paying whatever it is, 5.5%, but I'll just refi. Like I'll take the pain for 2 years and refi." And the builders have cut back, and the immigrants are still coming. So I'm a buyer of some of the real estate is really getting cooked right now. I think that's pretty good opportunity.
We need BlackRock to puke up all the houses they bought up. Huh?
Commercial real estate, maybe office real estate. I'm not brave enough to wade into those waters.
Yeah.
But residential real estate, some commercial. But that America is so overbuilt on malls and whatnot. That scares me.
So what do you think of the banks? I've been reading that half of them are undercapitalized right now.
I'm a buyer of fear. This hold to maturity, it's so philosophically difficult, right? Because they're underwater, but they can hold it as long as the deposits don't flee. But it's pretty easy to start a bank run. And you saw it in PacWest again, saying 10% of bank deposits left. So, there was a time, it was very tempting last week. So a weekly,
weekly,
2 weeks ago, when
yeah.
they were really puked down, and you're looking at, I don't know if it was Pac West or whatever, trading at 250, and it made, I think, $1.20 the year before. And you're thinking, yeah, even without deposits, like, geez, that's just getting real cheap. But you think they're just going to end up as zombies, right? Like, no money's going to come in. The money slowly trickles out. Nobody's can buy them. JP Morgan said they're done buying. So I guess Bank of America's got a bit of a hold to maturity problem. City, they'll blow it. So I don't, but what's more of a question for me is it negative? Is there a lot of, is it going to bring down the whole market again? Does it matter in the macro picture now? Maybe it still does, because
credit conditions will tighten for businesses.
Okay, on that side for sure, but maybe not that much either. I mean, there's some arguing it's worth 25 basis points, others are arguing it's worth 100, and then you see the tightening. Fed, of tightening. So, okay. I don't think the Fed's hiking anymore, though. So that to me is, but the market's priced in 50-60 basis points of cuts by year end. How confident am I that that's coming? Not that confident. I mean, a lot of that's tail risk, right? I think people look at that curve and say, well, the market's pricing it here, but really you have the market, so it's pricing it coming down, but really you have half the market pricing it here, and then you have, which is no change, and then half the market, we're not half, pricing that they might cut by 300 basis points because it's Bank of America in trouble, right? So it ends up showing 50, but the path isn't 50. It's either like 100 or 200 or nothing. And that is kind of a weighted probability. And I think that's the way to look at it, rather than the Fed's wrong or the market's wrong. But, they're not, I think what I'm listening for from them is talk about recession, right? How much they don't want a recession. Because they kind of say, well, we could tolerate a mild recession. And Powell's saying no recession at all. So when they are looking at a recession, are they going to say, no, we need to fight inflation and kill inflation? Or say, listen, I don't want to be the guy who caused inflation and then caused a brutal recession and was slow on both and go down as maybe the worst central banker ever. I mean, he's kind of teetering in that direction right now. And these guys, they think about their legacy. So he needs a win.
Adam, don't you think he knew all the banks were loaded up with the stuff that they were directed to buy, to play the game with the central bank, and the old saying that keep doing it till something breaks, and something broke, and he still raised a quarter. So, to me, it's starting to look intentional. Could it be the Fed's game to want to get rid of all the competition, let his buddies like Jamie come in and buy assets cheap, and then there's only maybe a few major banks left as we move into not the treasury digital dollar, but the central bank digital currency? Why is it not coming from the treasury like all our currency has during our whole history? It doesn't say treasury. Digital currency. It says central bank. Is this a hostile takeover of the treasury by the Fed?
Few steps away. I mean, I'm not going to weep for the death of regional banks. Like, they're still banks. I mean, they're not the little guy. It's not some little community bank. Maybe the ones with 3 branches, sure. But
I thought it was like in that one in the Jimmy Stewart movie.
Like, it's a place to keep your money. And I don't understand why anybody uses a regional bank, or they don't pay any interest. I mean, maybe the service is really good and they rub your feet when you bring your money in. But if I move to the United States, we write the JP Morgan or whoever. I don't, but maybe I'm missing something there. But for me, the Fed, you look at the history of the last 30 years of America, which have been very good for America. And a lot of that is low rates. The power of low interest rates and keeping inflation low, it's remarkable. It really is unbelievable. You don't have that in South Africa. You don't have that in a lot of places in the world where you really have guaranteed low inflation. And, the investing and borrowing that goes on when you have very low inflation and low rates It benefits everyone. And the Fed is right about that. And they would rather, I think, theoretically have a recession and guarantee that the rest of the decade is low rates than not. But now I think when they're actually in it, they'll panic and cut rates and maybe cause more inflation. But looking good, Dale.
There's Mario Draghi playing lead guitar. He's still busy out there doing riffs for Italy. So anyway,
but I mean,
you know what? This is
and then
very
I think
good.
AI. I think the Fed though looks at AI and says it is deflation. We heard Druckenmiller last week talking about it. It is so deflationary. So I think at some point they have confidence that inflation isn't going to be a decade-long problem, and maybe that's misplaced, but I believe it too. And so they'll cut.
Well, if AI destroys humanity, like Musk says, there should be lots of goods. Lots
the BCA report comes out. The first bullet point of the BCA report, I can't remember what it was. It was the regular stuff. Second bullet point, we think there's a 50-50 chance that AI destroys humanity in before 20. Wow, maybe we should have put that as the first one, boys. But
anyway, I know I could use a little artificial intelligence as mine diminishes, and you bring it every time you're here, Adam. So again, kind of a low conviction environment, and we're not even into the dog days of summer.
Yeah, stuff will come up. I mean, the debt ceiling trade right now is just a buyer of panic. That's an easy peasy. I'm leaning into oil a little bit, copper producers if you can hang on. And then dollar longs. I mean, you're on it.
I like that dollar long. Yeah.
And
all right.
It's still the greatest economy in the history of the world.
So check out Adam on Twitter at FX_button at Forex Live, and what him and Greg do over there. And Adam's really has his finger on the pulse of news events. Any big news events you're looking forward to trading coming up here?
I'm off for a few days starting tomorrow. I'm going fishing, Dale. I'm looking forward to pulling a few big fish. The fishing season opens here Saturday. So
all right, buddy. What are you going for up there?
A walleye is the fish up there. So
any northern pikes up there?
Yeah, they got a lot of big snakes up there.
All right. So, well, man, you know, recharge. Anyone who could do a 3-day trip to Johannesburg needs to recharge their battery.
FX button will be FX_button will be a fishing Twitter starting on Saturday for a few days.
All right, man. Well, may you fill your nets and have a great time, buddy.
Thank you very much.
Adam Button, everyone. Follow him at Adam_FX Button. And check out what he does at Forex Live. Adam's one of the better ones out there. Thank you, buddy, for stepping up and being with us today. Appreciate it.
Have a nice day.
All right. My trading warrior brother, Adam Button. I hope you guys enjoyed him. Could join the team in 14 minutes for the morning edge, and I'll see everyone tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.